Who owns America's debt? U.S. government owes how much? The U.S. federal government is over $34 trillion in debt. But have you ever wondered, who actually owns that debt? Is it China, Japan, Wall Street, or us, the American people? In this video, we'll break down exactly who the U.S. owes money to, how much is domestic versus foreign, and what it all means for our economy and your future. Total federal debt snapshot. As of late 2025, the total U.S. national debt is over $34 trillion and growing. This debt is split into two big chunks. Publicly held debt, about $27 trillion. This is what the government owes to individuals, banks, foreign governments, pension funds, and the Federal Reserve. Intragovernmental holdings, about $7 trillion. This is money the government owes itself, mainly from borrowing from Social Security, Medicare, and other trust funds. So who's really holding the bag? Let's dig deeper. Domestic creditors. Surprisingly, the largest share of U.S. debt is owed to Americans. Here's who's on the list. Federal Reserve owns over $6 trillion, about 17% of total debt. It buys Treasury bonds to manage interest rates and stimulate the economy. Mutual funds, insurance companies, and pensions. These American institutions hold $5 to $6 trillion, investing your retirement savings in government securities. Individual investors and banks. Another $2 out of $3 trillion comes from U.S. citizens buying Treasury bonds as safe investments. So yes, we owe ourselves a lot of this debt. But what about foreign lenders, foreign creditors? Foreign governments and institutions hold about $7.6 trillion in U.S. debt, roughly 22% of the total. Here are the top foreign holders. Japan, around $1.1 trillion. America's biggest creditor overseas. China, roughly $800 billion, down from previous highs due to rising U.S.-China tensions. United Kingdom, about $700 billion. Belgium, Luxembourg, Ireland, and Caribbean banking centers also hold hundreds of billions. Why do these countries lend us money? Because U.S. treasuries are considered safe, stable, and easy to trade, like gold but with interest. But there's a catch. Why this debt matters. Debt becomes a problem when interest payments rise. The U.S. now pays over $1 trillion a year just to cover interest. That's more than defense spending. Foreign influence grows. Countries like China holding debt can be a geopolitical risk if relations sour. Crowding out. More debt means the government might borrow more from the same pool of capital that private businesses use, raising rates and slowing growth. Bottom line? The more we owe, the more fragile things get during a crisis. What can be done? Can we fix it? Yes, but it won't be easy. Options include raising taxes or cutting spending. Neither is popular. Boosting economic growth to generate more revenue. Or be inflating the debt away, which silently erodes what we owe, but hurts everyday Americans. Either way, understanding who owns our debt is the first step to shaping a smarter financial future. So next time someone says, "We're borrowing from China," you can say, "Actually, we owe more to ourselves than anyone else." Hit that like button if you learned something new. And don't forget to subscribe for more clear takes on the economy, markets, and your money. This is news that pulse stock. See you in the next one.